This is the silver chart on the daily chart. Now, obviously, it looks like there's a downward trend here. And I'm not going to say this so much from a technical standpoint, but I could see a couple other things going on in the world today. There's a slowdown going on in China, so there's going to be less demand for commodities, and that news hit today. So if you knew that story, people knew that was coming out. Then when the news stories hit everywhere and they all pick up the same story, it drives the market down. Although we kind of knew this was coming up last week. And also the situation with the euro, I think, is far from resolved. So commodities are considered pretty much risk assets, so people are dumping out of them a little bit. I want to caution about trying to guess when there's going to be a bounce on something. It's damn difficult because, I don't like trying to catch. Let me put it this way. Look back here on December 11th. This was Euro news that drove this down, right? This is daily chart. So December 11th, big down day. December 12th, another big down day. So maybe you're thinking it's going to bounce. December 13th, an extremely hard down day. And look what happened down here. December 20th, 21st, 22nd, 23rd, 20. You might have had an even day on the 25th. Well, there's no trading going on the 25th. Down on the 26th, and a major slam down on the 27th. So, if you get in a leverage position, then you're really screwed. It's tough to say when there's going to be a bounce on something. Because sometimes it bounces and sometimes it don't. Just like on this day, dropped 3 days in a row. Now, I want to go over something else too with, Empire State Building, right? It was completed in, I think it was 1931. Yeah, completed 1931. But, I'm trying to drive home a point because I was reading some other things about skyscrapers all over the world and when they were built. The excavation on the site began January 22nd, 1930, only a few months after the big stock market crash in 1929. So obviously this whole thing with the funding, the planning, and what they're going to do, and it was all done during the heyday when everything was going great in the 20s. And that's when people build skyscrapers. And if you look at Dubai, that's what happened over there. They built all these skyscrapers. Now, maybe if oil's high enough, Dubai will do fine. But, it's difficult to say because a war could change their outcome in 2 seconds flat. But in China, there's a lot of skyscrapers that have been built and are under construction. That tells you when there's like a serious economic boom in commercial construction all over a country. It goes on during the most optimistic times, and that's usually when everything is really high. They're making these big plans. This was the biggest building in the world, the Empire State Building, until the North Tower World Trade Center was completed in 1972. And and quite obviously, what happened after the World Trade Center was completed in 1972, there was a lot of recessionary times in the 70s, too. So all the way up to the late 70s. Now, that's a kind of an indication what's probably going on in China, too, because, they got all the skyscrapers. There's major construction slowdown going on in China. Yet, everything was planned beforehand when everything was looking great. It was on easy credit, and they're tightening up the ship right now. But doesn't mean that country's going to fall apart in the long run, quite obviously. But the skyscraper theory about when an economy is going to have a turn down, it's usually when a country starts building all these big skyscrapers all over the place. That means there's easy credit. There's this building, the Empire State Building, was called the Empty State Building for a long period of time because there was no nobody renting it. It's like they built this damn thing during the 1930s, during the Great Depression, and it remained mainly empty for many, many years until it became profitable around 1950. So all throughout World War II, the years after World War II, and all during the 1930s, this thing was unprofitable for like almost 2 decades. So, beware, like when you're pointing the finger sometimes at China, if they're screwing up, it doesn't necessarily mean that whole country's going under. It's probably pretty strong overall. Now, my theory about economics actually kind of relates to nutrition, because I think a lot of people in the United States their brains are all clogged up by processed foods and processed corn syrup, sugary products, and all this other garbage and hydrogenated fats. Actually, if you looked at that stuff and you looked at the Chinese diet, you kind of understand why they're producing more over there in China than they are over here in the United States. Not that we should do too much for the elite, but you know what I'm saying. It kind of does work very well with the when people are more alert and feeling better. The whole productivity of the economy goes up. It's kind of an angle they don't put a number on. That's because they're a bunch of square-headed, block-headed morons. They can't think beyond the box. Looks like the next country that's going to default is Portugal. And, they've been saying this stuff. And, I was always talking about this Greek drama. Either they're going to... I kind of expected them to print so much money that they would bail them out that way rather than that they would default. So that is really why I switched my position on silver, because I think that when it didn't go ahead and print a whole hell of a lot of money to cover the Greek default, that obviously means, there's going to be a constriction of liquidity, right? So, if they took the opposite approach and just print it, and I think that's going to come up when there's a bigger crisis coming on, and I think there's one brewing. So the Greek drama was going on for 2 years. Bureaucrats insisted there was no risk of default, just like they're insisting everything's great right now. The Greek Republic ultimately became the first developed country to default in 6 decades, the largest sovereign default in modern history, and investors shrug it off like nothing, right? At least that's how they're making it look in the papers, but I think a lot of smart investors are saying, that doesn't look good. Bureaucrats say the Greek situation is unique and exceptional. Portugal is next. That's what I'm saying. Portuguese policymakers have expressed confusion at the debt market's reaction to their efforts to meet the fiscal targets made by last year's Troika rescue package. Now, they're expressing confusion, but it's like the market's got some brains and they're realizing there's like a lot of phony numbers going on. A second review document published by the IMF last December 2011 showed that Portugal reduced its fiscal deficit by more than 3% of GDP last year to below 6%. But if you dig into the numbers, this shows that the fiscal improvement is not as great as it seems, because what they did was the reported deficit would have come in almost 2 percentage points below the desired level. What they did was they fudged the numbers and did a last-minute transfer of banking sector pension funds to the government Social Security system. So that transfer accounted for almost 60% of the adjustment in 2011. That is what they did. They basically transferred some banking sector pension funds to the government Social Security system. So it's not part of the debt. It's just a scam. That's all it is. One accounting entry and everything's gone. Add in accelerated domestic demand destruction, because the economy's looking garbage, and so there's no consumer demand. Rapidly decelerating export growth means that the 2012 economic contraction could be well greater than a 3.3% decline, and it'll make 2012's targets unattainable. It is possible the economy contracts by over 5% in 2012, which will result in low tax revenues. Unlike Greece, the Portuguese crisis originally stemmed from excessive private sector debts. that currently amount to almost 200% of the gross domestic product. So there's a different angle to this, and they are looking bad because they're fudging the numbers. They got a hell of a lot of debt, even in the public sector, but they have a lot of debt in the private sector too. The largest and persistent decline in the economy is certain to make a vast number of loans unserviceable, and the eventual losses incurred by the banking system could well become public debt, which they can't add to because it's already sky high. The economy says that the restructuring of the Portuguese sovereign debt could prove unavoidable. So in other words, when they're saying restructuring, default. That's usually what that means, restructure it, we won't pay it. The euro crisis is far from over, and that is my contention. They're the next one to go down. It's not drama. It's like the numbers don't add up, and what they're doing is they're faking stuff out with accounting tricks. As far as the oil market, it had a bad day today, and I'm in double leveraged oil. I'm just holding on to it because I think at one time, this thing might go up unexpectedly, and I don't want to be, no matter what happens, there's going to be an astronomical move. That's what I'm thinking. 5 carrier groups in that area tells me something's coming up. Now this is still a bullish flag. It didn't go below here or nothing like that. Actually, it would have to get down to like 100 to be looking really bad. And I don't know if it would or not. It doesn't seem to make sense, but you never know. The markets will do whatever the markets will do. Now, as far as today, it looks like everything got hammered across the board, especially silver. And, looks like the gold-platinum ratio went the other way again. It looks like gold and platinum are now equal in value, or at least in price. And I'm expecting this stuff to drop further. So I'm waiting. I'm short in silver and gold. And actually, that short position is not that far ahead at all. It's very minor ahead. So it's a dangerous game, but I think the trend is in place, and we're going to see sub 1600 gold and probably below 28 silver, and I'm thinking it's going to go below that too. It can be driven down by something really hard, and looking back to this chart, it didn't seem like it back then too, like here in December, and look what happened to silver. It can drop that far. So. But in reality, the stuff does have intrinsic value. I'm just talking about more or less the electronic markets, and just hang on, because I think it actually is going to have a very good year this year. But I'd like to get in shorted on the way down, get back in, and go long on the way up.